Hello traders, welcome back to my channel. Today we'll be talking about what Forex is all about, brief history of it and how you can start trading Forex. So let's get started. What is Forex? Forex or FX is just an acronym which means foreign exchange. This foreign exchange refers to the global marketplace where different currencies were traded. It is the largest and most liquid financial market in the world with a daily trading volume exceeding $6 trillion. $6 trillion entering into one market a day. That's huge, man. Not billion, but trillions in dollars. That's a very big lot of money. So what did I mean about forex market being liquid? The forex market liquidity means that you can easily trade large amounts of money quickly and at stable prices with ease of transaction. Now let's dive into what forex trading is all about. Forex trading is the act of buying and selling of currencies with the aim of making profit. Currencies are traded in pairs, for instance, Euro USD, GBP USD, AUD card. GBP USD stands for Great Britain pounds against the United States dollar, AUD card, Australian dollar against the Canadian dollar, and so on. Now, how did you trade these currency pairs? That's where analysis comes in. We have three major types of analysis which I will discuss separately in a video. All of these types of analysis are solely aiming at one thing, which is speculating what will happen in the market next, which will give you an edge of what to do next, whether to buy or to sell. Take for instance, if you want to trade Euro USD and you have done your analysis and your analysis says that the Euro currency will be stronger than USD currency, then you buy Euro USD. But if it says otherwise, you sell Euro USD. I know you might get a little bit confused here, but I got your back as I will be dropping series of detailed videos with simplified explanation continuously on how to trade forex profitably. Please like this video, subscribe and share this video, and also turn on the notification bell so that whenever I drop a simplified teaching about forex trading, you'll be notified, and I know you will not afford to lose any of it. Now let's move on to the history of forex trading. The history of forex trading is segmented into 5, which are listed here: the ancient beginnings, the Middle Ages, the gold standard, the Bretton Woods system, the modern era. Now let's dive into explaining them one after another, starting from the ancient beginnings. So currency trading dates back to the ancient times. The earliest form of currency trading involves the barter system, where goods and services were directly exchanged for other goods and services. Okay, let me explain the barter system. Take for instance, I'm a farmer and you are a blacksmith and I need hoe for my cultivation, and you are the one that is making the hoe. There is nothing like money then, so I'll bring my farm produce to you, then we exchange it with the hoe. I go home with the hoe, then you go home with the food stuff. So that's how barter system works in the ancient beginnings. There's no money, there's no means of exchange then. So now let's move over to the Middle Ages. Imagine a world without banks or credit cards. That's pretty much what the Middle Ages were like. Money was mostly made of gold or silver coins. People didn't have lots of money like we do today. Most people were farmers or workers and didn't earn much. Now, in these Middle Ages, how did people pay for their things? Number one, by barter system, like I've explained before. This was the most common way to pay then. You would trade something you had for something you needed. For example, a farmer might trade chickens for bread. Then the next way they used to pay is through coins. Then the next one, which is exchanging on credit. Sometimes people would promise to pay later. For example, a blacksmith might make something for a farmer and the farmer would pay when they could. That's it for the Middle Ages. Now to the gold standard, which started around 1870s to 1914s. The introduction of the gold standard system pegged currencies to gold, providing a fixed exchange rate system. Imagine money was made of gold. That's basically the gold standard. Every dollar bill, pound, or euro you had could be swapped for a tiny bit of real gold. So the value of your money was directly linked to the amount of gold a country had. If a country found a bunch of gold, their money would become more valuable. If they lost a lot of gold, their money would be worthless. So now, this system lasted until World War One, which led to the economic turmoil and abandonment of gold standard. So this brought about the Bretton Woods system, which started around 1944 to 1971 or so. This Bretton Woods system established a new international monetary policy where currencies were pegged to the US dollar, which was convertible to gold. Imagine a world where all money is tied to gold. That's basically what Bretton Woods system was. Gold was the boss, gold was the most valuable thing, and its price never changed. The dollar was the helper. The US dollar promised to exchange itself for gold at fixed rate. So the dollar value was based on gold. Other money followed the dollar. All other countries tied their money to the US dollar. This meant their money's value also depends on the dollar and indirectly on gold. So the whole world's money system was like a chain then, with gold at the top, the dollar in the middle, and everyone else holding on to the dollar. This system was supposed to keep money values at stable and prevent ups and downs of currencies, but it didn't last forever because there wasn't enough gold to back up all the dollars in the world. This system lasted until 1971 when the US suspended the convertibility of dollar to gold, leading to floating exchange rates. So that's where the modern era comes in, which is now the technological advancement. Since the collapse of the Bretton Woods system, currencies have floated freely. The modern forex market began to take shape in the 1970s and 1980s with the advancement of technology and telecommunication enabling real-time trading. The rise of internet in the 1990s and the 2000s revolutionized forex trading. Online trading platforms emerged, making forex trading accessible to retail traders. Today, the forex market is the largest and most liquid financial market in the world with trillions of dollars traded daily. It operates 24 hours a day across major financial centers in different time zones. Like the forex market opens on Monday to Friday, 24 hours continuously, except on Saturdays and on Sundays. So now let me talk about the major forex trading participants. The number one is the central banks, which are called the whales. The function of the central banks is that they manage a country's currency, money supply, and interest rates. They are key players in the forex market because their monetary policies and intervention can significantly influence currency values. Now, the next one, the second participant in the forex market, they are the commercial banks and the financial institutions. This is where broker comes in, but I will talk about broker in a couple of next videos. Now, what's the function of these commercial banks and the financial institutions? The commercial banks and the financial institutions conduct the majority of the forex transactions. They facilitate currency exchange for clients and engage in speculative trading. Now, the third participant is corporation. These ones are just the businessmen. Corporations engage in forex trading primarily to conduct international business and manage currency risk. Companies that import or export goods and services need to exchange currencies to pay for goods and services or repatriate profit. Now, to protect against adverse currency movement, corporations use hedging strategies to curb these issues. So now, the final one, which is individual retail traders. This one are us. We are the one that are retail traders. Before you can participate in the financial market, there is a certain amount of money you must have before you can trade in the financial market. So, but this broker, the second participant I explained about, that's where They give us leverage which will help us to participate in the market. I'll talk about leverage. So don't worry yourself about all this what I'm using. Now, what is the function of the individual traders in the forex market? The individual traders, they participate in the forex market mainly for speculative purposes, aiming to profit from currency fluctuation. Like I've explained before, if you want to buy Euro USD and your analysis says that Euro will be stronger, you buy Euro USD. When it goes up, then you sell there. So that's how it works. Now, with the rise of the online trading platforms, retail traders have easy access to forex market. The retail traders speculate on currency movements using various strategies. That's all for the market participant. Now, the most important part, how to start trading forex. Now, I've listed some steps you can use to start trading forex. And the number one step is learn about forex. This one is very simple. You now have the basic concept, but you will need to understand more of the terminology and how the forex market operates. The terminology like leverage, 1:1, long, short, these are terminologies in forex market. You get to know them when you advance into studying about it. So now the second one is developing a trading strategy. One of the most important one. You must have a strategy, whether fundamental, whether technical, or whether sentimental. Anyone you choose. Choose a trading strategy that aligns with your trading style and risk tolerance. Now the third one is develop a trading plan. One of the most important, but not developing the trading plan is the problem. Creating a trading plan includes your goals, your risk tolerance, strategies, and the criteria you will use to assess these trades. The most crucial part is not just making a plan but sticking to it. That's the most hardest part of forex trading. You make a plan to stick to it. Once you stick to the plan, a working plan, you will see yourself in the success. Now, the fourth one, setting up a brokerage account. Select a broker. Okay, a broker is a firm that acts as an intermediary between you and the forex market. You leverage on them, like you bring in your small amount of money, then they will give you rest you need to trade for you to make profit. Choose the right broker. You make inquiries. When I will be making the video about broker, I will give you some recommended brokers have used and I have not had any issue with them. So stay tuned. Now the fifth one, which is practice with demo account. This one is essential. I started with demo. So demo is not gonna give you an edge whether you are successful. You might make a lot of money while trading demo account, but when you started trading with real money, you see that you are not replicating what you are doing in demo account in real account because there is no emotion in demo account. So the demo account, the essence of demo account is just for you to practice the interface. Use it to master the interface of the platforms you are using, like trading views, MetaTrader for your brokerage platforms. Like many forex platforms provide the ability to trade with demo account before you put skin in the game. This is the time to ensure you have locked down all the mechanics of trading and tested your strategies. It is better to identify your mistakes and weaknesses in the practice mode than when your money is on the line. Although it's not easy, but as time goes on with your learning and your adaptation, you learn more. So the sixth one, which is starting slowly. Once you feel confident with your practice trading, that's when you fund your account with real money. Start trading with real money. Start off small to manage risk and gradually increase your trading sizes as you gain experience. Now, the seventh and the last one, learn and adapt. Keep up with the market news, economic indicators, and geopolitical events likely to affect currency prices. Be prepared to adjust your strategies as the market condition changes. I hope you now have a better understanding of how this fascinating market evolves and how to start, why it's so important today. If you enjoyed this video, give it a thumbs up, share it with your friends, and subscribe to FX Titan for more insightful Forex content. If you have any questions or comments, drop them below. I would love to hear from you. Thanks for watching, and until next time.